Hello everyone, my name is Lawrence and thank you so much for watching my channel, a channel that talks about investing in the stock market and also talks about financial independence. I am sure if you have access to social media, you're following and you're watching what is happening all over the world. Everywhere the news is about pandemic, coronavirus. First of all, before I start, I would want to sympathize with those ones who have lost people because of the coronavirus, and also those ones who have the sick people because of the coronavirus. And if you haven't gotten sick, if you're healthy, please, I would also want to encourage you to stay home, to practice social distancing and also personal hygiene, that every time you get in contact with anything, please try to use sanitizer and also wash your hands to prevent this pandemic. So from that, I will start by discussing my usual topic, which is investing in stock market. This pandemic actually, it has not only affected many businesses, it has also affected stock market negatively. Globally, actually, Africa, Asia, Europe, America, the news of a stock market is that they are down. So today I'm going to be discussing about how you should behave, how you should treat this stock market volatility or stock market going down. Before I discuss, actually, I was watching something very important. I thought you should first watch this video from Peter Lynch, one of the legendary investors and also a fund manager who actually performed extremely very well over the period of 27 years, what he had to say about stock market volatility or stock markets going down.
Are you concerned about the volatility in the financial markets today? Do you think something needs to be done to reduce it?
I love volatility. I remember when in 1972 the market went from down dramatically, and Taco Bell went from 14 to 1. They had no debt. They never had a restaurant close, and I started buying at 7, but I kept on to it, and it went to 1. And it was the largest position in Magellan in 1978 when it was bought out by $42 by Pepsi-Cola. And I think it would have gone to 400 if they didn't buy it out. I think volatility is terrific. I think these callers are very important. I don't think the market going up 80 points one day and down 80 the next is a good thing for the public. I think that's not a very good thing. But I think all of these callers and all these other things, to keep the volatility down each day is important. But the market's going to go up and down. Human nature hasn't changed a lot in 25,000 years. And some event will come out of left field, and the market will go down or the market will go up. So volatility will occur, and markets will continue to have these ups and downs. I think that's a great opportunity if people can understand what they own. If they don't understand what they own, they can own mutual funds, try and figure out mutual funds they own, and keep adding to it. Basically, corporate profits have grown about 8% a year historically. So corporate profits double about every 9 years. The stock market ought to double about every 9 years. So I think the next market's about 3,800 today, 3,700. I'm pretty convinced the next 3,800 points will be up. It won't be down. The next 500 points, the next 600 points, I don't know which way they're going. So the market ought to double in the next 8 or 9 years. It ought to double again in the 8 or 9 years after that. Because profits will go up 8% a year, and stocks will follow. That's all there is to it. But you should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means, that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be very, people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own.
Thank you for watching one of my greatest people in stock market. So he talked about 3 to 4 things about what you should do when the stock market is volatile or the stock market is down. Number 1 is, and first quote one of my greatest investors, that is Warren Buffett, who said you should be greedy when others are fearful, and you should be fearful when others are greedy. So this time, it's unfortunate that it's a bad time, but to investors, some of them, they get rich during this period. When the stock market go down, this is the best opportunity to buy the stocks that you have been following. So if you have been following some kind of stocks and they are down, this is the period you should start buying. That is one point to note. Second is, actually, I also wonder, I don't know the circumstances that you may be going through to those ones who are selling, but this is not the type of selling. If you're selling because you're panicking, I believe you're not an investor. Indeed, you're a gambler or a speculator, and this is not the perfect place for you. If you're selling without having necessarily any issue, just that you're fearing that the stock might go down, this is the perfect time of buying, not the perfect time of selling. In fact, Peter Lynch, in his video, if you watched very well, he said if the stock market goes down and you panic or you sell, this business, stock market, is not for you. So I encourage you, no matter how the business declines and you know its fundamentals are very strong, please do not sell your stocks. I'm sure if you have been following my channel, I've talked about the volatility, that if the stock market goes down, this is the period to buy, not to sell. So if you have been selling or planning to sell because the stock market is down, please, I advise you, this is not time to sell, but this is the time to buy. That is second time. Third, I always encourage my followers and the rest of my friends that no matter what, always keep certain amount of money in your portfolio, that in case the stock market declines and the stocks you have been following goes down, take opportunity. So take, for example, no one expected this pandemic and the stocks, unfortunately, they are down. So if you don't have money on your portfolio, I'm very sure you're not going to make anything out of it because you don't have money. I'm sure if you did not have money on your portfolio, you have learned something that you need to have certain amount of money on your portfolio in case an opportunity arises like this. You have to take opportunity and buy stocks. So always I encourage you to always keep certain amount of money in your stock portfolio such that you take an advantage of any opportunity that arises in stock market. That is number 3. Number 4 is you have to think long term, because over long time stock market will do well. That I may not be sure of what a month or 2 months will bring, but I am sure over long time, 5 years, 10 years, I know companies which are strong, they will do well over a long time. So because of this short time, we shouldn't be worried, you shouldn't be intimidated because the stocks have gone down. What you do, if you have your money, keep buying, keep stocking, because over a long time, stocks will do well. That is another point. Another final point, and the most important thing is know what you buy. For example, my perfect stocks in East Africa that I normally follow is banking stocks. So you should know what kind of business you have to buy. You should know what the company does, because if you don't know, you will not know why even it's declining. You will not know whether its fundamental have changed or not. So the most important thing also, before you invest in stock market, you just don't have to fall because it has declined, therefore it is going to be cheap. You must know why it is declining, and at the moment, most of the companies that are declining, they're just declining because of the fear of the market, not because the companies they have made losses. It's just because of the fear, or people don't have money to use, so they are removing it to use in this emergency. So most important, you have to learn about the business model of the company you're buying in, because for me, my favorite stocks in East Africa is banking stocks, because it's very easy to know how banks work, because they lend money, they bank for people, they do credit letters. Some of them they have also brokerage firms. So it's very easy to learn how some companies work. So if you don't understand any company, don't buy a company just because it has declined, because you may not know how and why it has declined. Another thing also to add on the company, to know how the company, what the company does, you have to also do the basics of the fundamentals. You have to read about the balance sheets, you have to read about the past performance, how it has been doing, so that you can know its financial position before you buy into the company. And finally, above all, you need to learn how to be patient. You need to be disciplined in this period. Just wonder, what kind of people are selling these stocks? Is it because they have issues, or is it because they don't know what they were buying in the first case and they lost patience? Patience in stock market is one of the most important assets you have to have. First of all, actually, if you don't understand what you're buying, therefore you not even understand why you're buying. So it's very, very important to be disciplined and patient and know what you're buying, because if you don't know what you're buying, you also don't know what you're selling. So those were my few topics or lessons about what you should learn or what you should do during this stock market lockdown or stock market decline. Once again, thank you for watching, and please take care. Remember to keep yourself distant from others. Keep yourself safe. Please, once again, I encourage you to wash your hands every time you get in contact with anything. Again, you need to follow social distancing, and also keep yourself home if you don't have any important business you're going to do. This is how we can fight this pandemic. Thank you for watching. Once again, thank you for watching. If you like my content, please do not forget to subscribe and also hit the bell notification. In case I release another video, you'll be able to be notified. Thank you. Have a good day. Bye bye.